Woohoo! Welcome to Math 75, Monday, October 5th, 2020. And this is my first attempt at recording myself talking about the stock market. Normally, in a face-to-face class, I would come in and we would spend the first 10 to 15 minutes of every class discussing the stock market. And you can see right here that what I've done is I am using the Apple Stocks app. Now this app is particularly awesome because it is so flexible with regard to what stocks you have, what stocks you can select. You can see I've selected a number of different stocks and indices and other sorts of interesting things we can talk about. And I really love that it's got a lot of flexibility. Look at me running along the Dow. I can look at today. I can look at this week. I can look at this month. And we can talk about what's happening with the stock market, or specifically Dow Jones. Now for this class, I will be focusing on the Dow Jones. The Dow Jones is short for the Dow Jones Industrial Average, which is a collection of 30 stocks, which you can look up. I'm not sure of the entire set. They've just changed again. And these 30 stocks are selected across many different industries, many different economic groupings, so that they will represent an attempt to kind of take the temperature of the economy, or at least of the stock market on any given day. The Dow Jones is called an index, which means it's that collection of 30 stocks. So it's not just one stock, it's a bunch of different stocks. So when you're watching it, go up or go down, go up and down and up and down, that could be any one of the stocks going up, or it could be a bunch of the stocks going up, or you could have a bunch of stocks going up and a bunch going down, and they cancel each other out. So the Dow Jones is like looking at that snapshot, just picking 30 stocks to tell you what's going on. We will base most of what we talk about on the Dow Jones because it is readily available. Almost every financial source is going to tell you what's going on with the Dow Jones on any given day. It is simple because there are only 30 stocks. You may have heard of the S&P 500. That's 500 stocks. So you can look at different indices or indexes to see what's going on. The Dow Jones is really just easier to look at and simpler to look at. I like the Apple Stock app because it is very simple. There isn't a lot going on. You can certainly find dashboards that'll give you more information, but I want to keep mine fairly simple. So let's take a look at the Dow Jones. 1D means 1 day. And then you'll see it says 10, 11, 12, 1, 2, 3. So the first question I would ask you if we were in class today, I would say, what the heck are these numbers? And the answer is that they are the times. This is 10 o'clock, 11 o'clock, 12 o'clock, 1, 2, 3. So it turns out that the market is only open from 9:30 to, I believe, 4:30 or 4. I always forget that. So it's either closing now or soon. When I'm recording this, it's 1 o'clock in the afternoon on Monday. So you won't see any activity before or after, although there is trading on futures, and there's other sorts of trading that can happen. Movement can happen in the stock market when the stock market is not open, but nothing that we normal humans can engage in. So that's what we're going to be looking at. You see, we started here. This is where it opened this morning. And let's see if I can get a number. There we go. It opened at $27,914.56. And then you can see it looks like it's, doing a lot, bopping around. Look at that. But what I want to do is I want to go all the way over to the right and check what the range is. So these numbers down here, this was the domain. Here's the range. And the range is actually fairly shallow. The range is just above or just under 27,800. It's 27,797. And it comes up here, the highest point is 28,169, right? And I'm not sure if that's where we are or they've just kind of capped it at that. So this is only a difference of what, less than 400 points. So as Dow Jones days goes, this is not an extraordinary one. The fact that it gained that much is awesome, but there are other days when it has moved more. Let's check a week. Now a week is suddenly getting really interesting because we can look back and we can see here it says 2930. Those are the September dates. 1, 2, 3, well, 1, 2, and then suddenly we got to 5. And so the first question is, where's 3 and 4? Where did they go? And hopefully you answered, well, those were the weekend and the stock market is not open. And I was like, yes, the stock market is closed on Saturday and Sunday and almost all holidays. The stock market loves to be closed. It just does. It loves to close for any reason whatsoever. So you'll notice that over last week, if we look at the lowest point, it got down on Monday down to 27.3. And we're up here at 28.1. So over the last week, we've gained closer to what, 800 points? And you can see it's been very volatile. You can see it coming up and down. And one of the things I'd like to do in class is spend as much time as we can afford to talking about why does the stock market move, specifically the Dow Jones. Dow Jones is different. We could be looking as well at the NASDAQ over here. That tends to be technology stocks. I watch those. This is the Nikkei. I'm looking at an index of Nikkei, stocks on the Nikkei market, which is Japan. Here's the DAX. That's Germany. Remember that Germany does not call itself Germany. So it starts with D, not G. And then here's Hang Seng, which is Hong Kong. And then I do follow eBay because I think that one's interesting. This is a couple of other composites that are interesting. I follow Apple. I think everybody follows Apple if you have the Apple stock app. I follow Ford, and the reason I follow Ford is because it's one of the older, more stalwart, used to be stalwart brands in the United States. They make cars, and so they represent old school Detroit heavy industry. So that's interesting to watch them. Here's Facebook, which is everybody's really happy, which we'll talk about in a little bit. Tesla, I follow because it's a little bit bonkers. If you follow Tesla, you know it's a little bit bonkers. And the person in charge, Elon Musk, is just a little bit unhinged sometimes. So here we go with crude oil. Now this is an interesting one. I follow crude oil because, come here, 6 months, there we go. Ooh, they fell, there we go. I want to look at that fall. This is futures of crude oil. So this is different. Most of these up here, we're actually talking about stocks. Stocks are a way to invest in individual companies, or sometimes you invest in a lot of companies together. You can invest in an index, a collection of companies. Some things like crude oil or Bitcoin futures, you can invest in actual commodities. So this is oil, and the thing about oil is the rules are very specific. If you would like to, you can say, I would like to buy some oil. So this says for November. So I would like to buy some oil for November. And you are agreeing to buy the oil and take it. So you have to put it somewhere. So a really interesting thing happened right last April. After we had been in quarantine for about a month, no one was driving. No one was moving around very much at all. Airplanes had all but stopped. And suddenly we had too much oil. We had too much gas. No one was using any. And the oil companies had continued to produce it. So all of a sudden, and I don't know if you guys can see, it goes and it disappears. And that is because for a very short time in April, you could actually buy oil for negative dollars. You could actually pay. So in other words, they would pay you to take oil. The downside was you had to agree to take it and put it somewhere, which if you don't own a swimming pool would be really hard to do because they were just going to deliver it. You were going to have to take it out of a tanker and that would be it. You'd have to figure out what to do with it. All the storage was full. Well, now they reopened the economy and oil is back to a more stable price. You can see it kind of flattened out there and you can see it bopping around a little bit. This is really, really low. This price at under $50 a barrel is historically really, really low. So you can still see that the demand for oil is not high yet. We're still not driving as much. We're not flying in airplanes as much. So we're not using it very much. And when demand goes down, prices also go down with demand. I've got Bitcoin because, Bitcoin is bonkers. This is over 6 months. If I go into the 5-year, you can see over here, you can see the range of prices for Bitcoins. There have been futures made and lost on this. So that I find interesting. Boeing is another one that I follow because, and you can see, let me move it, Boeing, back to the last 6 months. You can see that as of June, Boeing was doing great. And then, oh no. So here, and we could talk about why we think this is. Why we think that when the quarantine started, the price was low, but then in June it looked good. Everyone wanted to buy Boeing stock, and then, oh no. So those are interesting things to talk about. I do have the S&P 500 here. It's something that I look at. It is being so large, it tends to have a much slower movement. If you imagine, if you're trying to drive like a cute little sports car, they're tiny, they're fast, they maneuver really well. And then if you imagine driving like a giant truck, it takes a lot longer to slow down. It takes longer to speed up. That's true as well of the S&P 500 because when individual stocks move, the other 499 stocks tend to hide that movement that covers it up. So when we look at the whole 500, we see a much, so let me move, this is 1 day. Let me move to 1 year of the S&P 500. Okay, and I will give you 3 guesses. Where was quarantine? Oh, I don't know, maybe there? March 23rd, right? We had, our school, City College, had stopped meeting on the 13th. The 12th was our last day. And here we are on the 23rd. So it's like a week and a half into the quarantine when everyone panicked. Maybe we will never buy anything ever again. Maybe no one will ever work again. What are we going to do? That was, and then it slowly has crept out, right? But if I look at a similar time frame with the Dow, where's my 6 months? You can see, let me go to the year. There we go. You can see that it tends to go up and down with higher peaks and lower troughs. So that you end up with a lot more volatility with the Dow Jones. With only 30 stocks, individual stocks can really swing the whole index a lot. So let's go back to 1 day and let's talk about what's going on with the Dow Jones. And there was a little bit of a dip here. That much of a dip, that's, if we look here at the high, 27,964 down to 906. That's a fall of like 60 points. That almost doesn't count. Someone could sneeze and the Dow Jones could lose 60. But then it came up, and then what's going on over here? Goes up. So one of the benefits of the stock app is that if you slide down here, it will show you what it thinks are relevant news stories. Now let's talk about this. There is, as far as I can tell, no way to customize these news stories. So Apple is selecting what it wants you to read. So be very, very careful with news that someone else is curating. Now, as it turns out, Apple tends to be more interested in getting free content than they are in swaying your information one way or another. So the content you're going to see tends to be CNBC, right? Sometimes MSNBC. These are free. These are network produced information streams. CNN, also free. Market Watch, also free. I believe Market Watch is related to Yahoo, but I would have to check that. Occasionally, you'll see Business Insider or Barron's, which is nice. You'll see a lot of USA Today. Again, that's free. A lot of Market Watch, as you can see. Barron's, here's Fox showing up. That's interesting. You don't see Fox a lot. But basically what I believe what Apple does is it has a search engine looking for stories that mention the Dow. And so if I were to go and look at NASDAQ, I'd get a different set of stories because these are all stories that are mentioning the NASDAQ instead, which is a different composite. It's a different index, a different market. So what I wanted to look at is I was going to jump into the CNBC story with you guys. I'm not going to watch the video. You guys are welcome to watch the video. I encourage you to watch and read and explore as much as you can. If you're going to go into business, you should know all the nooks and crannies. You should have your top 5 sources for business information. You should have a source on the left, like NPR, Marketplace, your local public station, even The Economist, occasionally Freakonomics. You should have your favorite source on the right, Wall Street Journal, Harvard Business Review, also The Economist, which tends to represent on both sides. So you should have different sources with different perspectives so that you can figure out what to trust, what to believe, what is spin. The only way to know that is just to consume a lot of information. So let's talk about a couple things that they're talking about here. US stocks climbed on Monday. That means they rose after President Donald Trump said he will be discharged from the hospital Monday evening, easing concerns. That means making them easier, making people less concerned about more political uncertainty ahead of election day. So the first thing the stock market hates is uncertainty. When things surprise the stock market behaves very badly. So if you imagine your friend who hates surprise parties and hates sudden news, even if it's good news, this is the stock market. The stock market wants to know that everything is going to be the same forever. So the stock market is already pretty upset that this year is an election year, right? So it doesn't know. Is Trump going to continue to be president? In which case it can expect fewer regulations and more business-friendly policies? Or will there be a new Democratic president? In which case there's a chance that taxes might be higher or that there would be more regulations. Nobody's really sure. So the stock market is feeling very uncertain right now. Okay, as we scroll down, ignore the ads. Investors also grew more hopeful that lawmakers would reach a compromise on a new stimulus deal. If you see the word stimulus, generally speaking, what they're talking about is they're talking about the government, usually the federal government, so the United States government, or sometimes a state, but usually it's the government. They're going to give somebody money. And specifically, this stimulus deal has to do with them giving money to Americans the way they did. So you remember towards the beginning of the pandemic, they sent everyone checks, money to help. And there was also a special deal where if you were on unemployment, you got extra money from when you were on unemployment. So there was just money being given directly to people. That's a stimulus deal. You can have stimulus deals that go to companies, you can go to individuals. Generally speaking, if people have more money, they will generally spend it, and the market likes that because that means the companies get more money. Now, there's also here, as well as a weak September jobs report. What does that mean? Well, every month there are economic reports. Every quarter there are economic reports. Every year there are economic reports. So the jobs report is the unemployment. What's going on? Who's working? Who's not working? And you know, the unemployment is looking a little. It's going to be a hard thing for us to deal with moving into the end of the year and into next year. A lot of people have lost their jobs because of the pandemic. A lot of people can't work because of the pandemic. You know, jobs just aren't there anymore. And jobs have changed. So this is going to be an issue that you're going to see coming up in the market. The markets don't want people to be unemployed, believe it or not. They do like it when companies save money, but they don't like it when people don't have money to spend. If you don't have money to spend on Candy Crush, Facebook is sad. Facebook wants you to spend money on Candy Crush. Okay, so, and so the rest of this article is about the announcement that the president will be leaving, and a couple things could be coming and rippling out from this. One, there were some fears that if the president got sick, that he would no longer be able to be president. That'll cause uncertainty. That would actually make the stock market very unhappy. Even if the stock market is happy that, even if the stock market loves the vice president, change is scary for the stock market. So the fact that the president's saying, I'm fine, everything's going to be fine, that's good for the stock market. The other thing that it's doing is the stock market is seeing this as a sign that people are going to be more hopeful about the COVID and about the pandemic, and thinking that it's not such a big bad situation, and be willing to go out and spend more money. That would be another hope of the stock markets. They might be looking ahead and saying, wow, this seems like it's no big deal. People are going to go out to eat more. It could be that this is going to cause people to be less afraid, for good or for bad. But the stock market is looking at it as, in the short term, you know, maybe people will get out and spend some more money. So this is good. Okay, a bunch of stuff about the president. And then here we go. We talk about the stimulus. So this is talking about the discussions between all the various politicians about whether or not they're going to be able to give everyone more money. And we've got Nancy Pelosi, who is in the House of Representatives, so the part of Congress that's not the Senate. And then and they talk about this, and the president has said he wants to get a deal, he wants to get money out in the hands of people, which would make people happy and possibly make people happy and want to vote. So this all makes sense. And then this gets very political, and there's an ad, and There we go, that's what I wanted. Markets seem to have lowered the chance of prolonged uncertainty post November 3rd. So let's digest that. Given that Vice President Biden has been ahead in most polls, this suggests that markets are assigning a bit more probability to his win and a bit less to a close and contested outcome. So what this means is that right now, that the stock market is starting to already guess that Biden will win the election, whether he will or not. And that means that if Biden were to win the election, you won't see a big change in the stock market. It's already being what they call priced into the market. Now, what would happen if he doesn't win? What would happen if Trump wins the re-election? Well, what would happen is what happened in 2016. Let me see if I can get us back to there. Let's see, 2016. Oh, see, the pandemic is such a big, there's the pandemic right there. bam. That's terrifying, isn't it? This actually was interesting. This little spot, because I'm sure you're going to ask me about it. That was the end of 2018. Things were just looking really. So the end of the year, people tend to sell stocks so they can get money out. They tend to get money out so they can pay taxes, so they can buy presents, so they can do all sorts of things. They move money around. So stock market tends to be a little sad in December. But also there was concern about a trade war with China. There was a concern about a worldwide slowdown that was on everybody's minds. So this was just kind of just all of the various concerns everyone had hit on the same day. I looked it up. It was December 17th, 2018, which you can see. I'm pointing to, you can't see. And of course, if I move my cursor, you can't see it. So December 17th is right there in the middle of the top header. So what happened in 2016? Are we going to be able to see it? Oh, are we going to be able to, can I do it? Oh, this is going to be hard. I'm not going to be able to show it to you, but right here, right after the election, overnight, the Dow Jones started to crash because the market had assumed in 2016 that Hillary Clinton would win the election. And when it was announced that Trump had won, the Dow Jones overnight, the overnight numbers, the secret numbers started to fall. And it was not looking good. Other overseas markets that are open when we're asleep started to fall. And in the middle of the night, suddenly they changed course and they righted themselves. So there was a brief little blip when it went down, and then they were all like, okay, we can live with this. And then they changed direction. So what would I expect coming towards the election? I would expect that there would be an interesting blip. So definitely be watching the Dow right around the election to see what happens. If Biden is elected, what does that happen? What happens there? If Trump is reelected, what happens there? So those are some interesting things that'll happen. September, October, November, December tend to be tricky because we're getting in towards the end of the year. A lot of people are selling stocks. They're moving money around. They're getting ready. They're thinking ahead towards tax season, believe it or not. They're thinking ahead towards spending money on presents. They're thinking ahead towards taking money out so they can go on vacation. So a lot of things will happen in the stock market over the next few months. And with an election just a month away, that's really interesting too. So woohoo. Hopefully this all makes sense. Hopefully I haven't talked too long and you guys are still listening. And woohoo, math on.